Too many owner-operators jump into this industry thinking about loads, trucks, and revenues, but they ignore the very business structure that determines how much of that money they actually get to keep. The truth is, the business structure can cost you or save you thousands of dollars every year. In this episode, we're going to focus on LLCs, corporations, partnerships, all those things, that business structure that really determines whether you're going to win or lose. I'm Chris. This is my 7th year owning a trucking company and hosting the Haulin Assets podcast. When I first started, I thought I knew trucking. Turns out I had no idea how much I would learn. Welcome back to Haulin Assets 2.0, where I take you through the good and the bad, the ups and the downs of being an owner-operator.
Indeed. Welcome, everybody. Welcome back to the Haulin Assets podcast. I am Craig. Over there, he's Chris. How's it going, Chris?
Good. How are you?
I'm pretty good. Pretty good. Chris, I'm 40 now.
Yeah, old man.
I've joined the ranks of the old people.
Welcome to the club. I'll be in it for a few more years.
So, Chris, today, as you said, we're going to be deep diving on business structures, some of the things to consider as you think about how to set up your business, right? Now, before we get into that, I'll remind everybody, HaulinAssetsLLC.com for show notes. I want to remind you about MotorCarrierHQ.com for the tools, tips, and people you need to make the leap to owner-operator. And then lastly, HaulinAssetsAcademy.com is where you can go do some self-directed learning. And we may have some more to say about these things later, but I really want to get into this topic. Chris, most owner-operators, as you say, they're going to focus on the revenue, which frankly makes perfect sense, right? If you don't have money coming in, your business isn't going to survive. But this business structure is vital to the success or failure of your business, especially right up front in this beginning part, okay? This has huge tax implications and others. So your setup is going to determine how much of that money you keep. How does it do that?
That's a good question, and we'll really dive into that today. And focusing on revenue, like you said, is important, but that structure is really going to determine how much money you keep, which is ultimately what we're trying to do in all of our lives, right? Keep as much money as we can. And there's really two ways that your business structure kind of does that. First, you've got a legal entity, a legal structure that protects your personal assets from your business assets and for your business operations. So in that way, it protects you personally from losing personal assets because of something that occurred in the business. And the second way is just IRS and taxes. If you set your business up right, there's different ways to do it, and kind of depending on what your goals are and why you're in business, there's different ways to do that setup so that you minimize your tax obligation to the government and you get to keep more of the money in your pocket rather than paying it to Uncle Sam. Paying taxes is important. We all kind of need to pay to play the game, but you don't want to pay any more than what is your fair share. And so you want to take advantage of all the tax benefits you can get as a business owner, but the benefits you're entitled to depend on how you set up that business. And so setting up seems daunting, but the nice thing about it is kind of once you get everything set up right and you do it right, it doesn't take much to maintain it.
Right. We've talked in recent episodes about things like insurance, where it's something that you're going to have to revisit over and over again. Insurance, loans, hiring employees. These are things that happen often over the course of a business. With your entity selection and setup, this is, for a lot of businesses, a one and done thing. And, there are instances where you may want to change your business entity down the road. That's fine too. We'll get to that. But that's going to be a rare occurrence in the life of a business. Am I right? So
it is, but you do have to, there is some maintenance in some states. It's going to be very minimal. You may just need to renew your business filing every year, or depending on what type of business structure you are, you may need to hold an annual meeting and record that and take notes for it. There's some minor things that you have to do, but yeah, for the most part, most of the work's done up front.
Right. Okay. So with a topic like this, because I'm going to go out on a limb, Chris, and guess that most of our audience didn't attend business school. Guess what? Neither did I. So a lot of this episode, I think, is going to be some repetition of words, phrases, concepts. So be patient with us because we're trying to help lock some of these concepts in. You can listen to this episode multiple times, but even so, I'm going to start with repeating something you said. The two things that this is about is protecting you legally and lowering your tax burden. Is that our umbrella?
That's
right
it.
There?
Episode done.
So, well, we want to know how to do that. Okay. But Chris, following on what I was just saying a minute ago, who exactly is this episode for? When does somebody need to care about this in the life of their business?
It's really for new owner operators, drivers that are thinking about becoming owner operators, or really somebody who's trying to grow a fleet. And all those people may have different goals, which are going to impact how you want to set up your business.
Okay. All right. Chris, let's get into the meat of it. And where do we want to start? Like, do you want to start with all the different business types? Do you want to focus on one in particular? Partnerships is a question that comes up all the time with new business owners. Maybe we start with that.
I think that's a good place to start, and because that's going to be something that we need to think a little bit more later on down the road. So yeah, let's start with partnerships.
Yeah, because this is, as I say, it's something that comes up often when you have a new owner operator or a new business owner in a lot of different fields. It's a scary step, and there's a tendency to say, like, I'm really putting myself out on a limb, especially financially. I'll bring in a partner, somebody who can help me soften the blow, or spread the responsibility around a little bit. How do you approach that idea and that conversation when it comes to a new trucking company?
So when I look at a partnership, I think there's a lot of things you need to take into consideration. One of the very first ones is this partner, it's one of those things where does 1 + 1 = 2, or does 1 + 1 = 3? If you're going to be able to achieve a better result because you've got a partner, then a partnership's probably a very good thing. If you're only going to be able to achieve with a partner the equal amount that you two could do separately, then you may not want to go through the headache of a partner. So it's really
all I have to do.
Simple math.
All I have to do is defy the laws of mathematics.
Yeah, that's it. When 1 + 1 = 3, then yeah, do a partnership.
No, I think I hear what you're saying though, because look, a business partnership, this is an imperfect analogy, but it is a little like a marriage. And this is somebody you're going to be intimately tied to, so to speak, for potentially a long time. And if you are, they say in marriage, like if you're keeping score, you're both losing, right? And there's some of that here, I think, is getting to what you're talking about. It's like, if you're with a partner in business where you or they are saying, hey man, that's not my job. That's your responsibility. You take care of it. Rather than working together to solve problems, focusing on your strengths, yes, but complementing each other in that way, that's going to be the most effective form of a partnership, right?
Absolutely. So once you kind of decide that, hey, yeah, partnership's the right thing to me, the next big question you need to ask is this person I'm thinking about partnering with the right person to partner with? And I think that really boils down to kind of three things you need to look at. Do you have a shared values, meaning something along the lines of am I willing to work, let's just say, am I willing to work 7 days a week and be ethical in all that I do, and my partner's willing to kind of operate in a gray area? Those kind of situations are where values aren't really aligning. The next one is that you've got to have a shared vision. For example, if your business partner's like, I just want to be an owner operator, have one truck, and you want to grow your fleet to 100, you don't have the same vision for what you want the company to be. So those are two really important things. And the last thing that I think is really important is you want to have complementing skill sets. And what that means is you don't want to have two people that are really good salespeople and that's what their primary strength is. You want to have somebody that's really good at sales and somebody that's really good at operations. That way your skill set, you've kind of got your own lanes, you've got your own areas of responsibility and your own strengths. And when you do it that way, that's going to make a really, really good team.
Right. Okay. And what if you have somebody that you just get along with? You've been best friends forever, or whatever. Maybe it's a spouse. Well, that's maybe a different question for a different day. But this is somebody that you really just want to go into business with, and you look at some of these questions you're asking, and the answers are, "Ooh, I don't know." We both tend to do the same type of work, and we have the same vision, but the tactics line up too closely with our skill sets. What do you think?
It's going to create friction in the relationship, and I think usually that's not going to be a bad idea. That friendship is going to be damaged by doing that, by going into a partnership that's not really going to work.
Right. Okay. So in that case, you tell your best friend, "Hey, look, love you, man, but this is not the best idea. Let's do our own separate thing."
Yep.
Right. Okay. And a little pain now to save you a lot of pain later, because of something else that I wanted to bring up, which is let's strain the marriage analogy a little bit and let's talk prenups. Okay. So, or you know what? Okay, we'll do a different analogy. One of my favorite sayings is "tall fences make for good neighbors." Right. So if you're familiar with it, if you've never heard it, basically the concept is it seems offensive, so to speak. Dang, I didn't mean to pun there, but it seems mildly offensive to put up a 6-foot fence between you and your neighbor, and they're like, "Hey, what the heck, man? I thought we got along," and you're like, "No, we do. I want to keep getting along, right? I want my space. I want my privacy. I want my whatever." Anyway, I look at a business partnership a little bit like that, where contract, exit strategies, these things are vitally important. Even if you and your partner are the best friends in the world, you want to have those things down in writing. Can you give me a little experience some stories from your experience as to why, or some thoughts?
Absolutely, you need to have that. So experiences with me, when you're first starting a partnership and when you're first working with somebody, you kind of come to all these agreements. Hey, this is what we're going to do. This is how we're going to operate. This is what our exit plan is. But if you're anything like me, 2 years down the road, 3 years down the road, one of those questions comes up, you're both going to have different, we're going to remember what you said differently.
Right.
And so it is critical. Like, it is suicide if you don't do this. Get everything in writing up front. A good operating agreement. Like, any business that starts out needs to have a good operating agreement where you write as many of those things that you think could potentially come up, down. Who's responsible for what? How are you going to exit? Who's putting in money, who's not putting in money. If you don't put in money, or if you're supposed to put in money at a future point and you don't, what are the repercussions? All of that needs to be spelled out in an operating agreement. It needs to be written down. It needs to be signed by everybody, so that more than anything, it just helps everybody remember what you originally agreed to.
Yeah. Okay. And this, before we move off of partnerships, this is a concept that I think we're going to come back to a few times in this conversation, and that is legal help. Don't do this alone, especially with a partnership. Like, it's to me a non-negotiable that a lawyer is involved, not because you're trying to get the better of someone, but because you're trying to remove uncertainty. You're trying to take the faulty memories out of the game, right? Yep. So again, something we'll probably return to. Anything else you want to say about partnerships, or can we move on to other structures?
Let's go ahead and move on.
Okay, so Chris, you have mentioned in the past that when someone starts their trucking company, you're probably going to want to form an LLC. So let's start there. What the heck is an LLC, and why do I need it?
LLC stands for Limited Liability Company, and most of these business structures, what they really do is they just separate, they create a separate entity. You could almost call it a separate individual. It's apart from you as the owner. So, you've got Chris Vernon, the person, and then you've got Chris Vernon LLC, the entity. They're two completely separate issues. So Chris Vernon LLC, the trucking company, it drives down the road, gets in an accident. It's not going to directly impact Chris Vernon and his personal assets. And,
Right.
and you're just really kind of creating that separation. Oftentimes you'll hear to it referred to as a corporate veil. It keeps everything separate so that you are protected.
Another tall fence. So to put this in hypothetical terms, you get in a wreck and someone is injured. Someone else is injured and they want to sue you for damages for liability, right? That's it. It's right in the name. It's a limited liability corporation. The idea being that you're now limiting your own personal liability for what happened as a result of your business operations. So that person sues Chris Vernon LLC and they win the suit, and your business crumbles, it can't survive, the business goes bankrupt. This is obviously not good. What would be worse is if you didn't have the LLC and they were able to sue you as the individual, and now suddenly it's not just your company, it's not just the company's assets, the truck and the trailer and all of that stuff. Your house is on the line, your cars are on the line, whatever you've got in your bank account is on the line, and fair game in a lawsuit like that. And I'm not a lawyer, I'm not dispensing legal advice, I'm just trying to describe the situation as I understand it. Am I on the right track?
That's exactly it.
Okay, perfect. So let's talk about then some differences between types of corporations that people could elect. Give me some options here.
The two main ones that you're going to see are limited liability company and then a corporation, or an Inc. is often incorporated, is often what they're referred to. And there's a lot of similarities. They both kind of create that separation, that protection. The LLC is owned by members. That's kind of how you hold your ownership, is as a member, and you own a percentage of that LLC. And then with a corporation, the ownership is in shares of stock. The publicly traded companies or corporations typically that have shares that are traded. And so that's really a lot of the biggest difference as far as how the structure goes. The next biggest differences come in based on how they get taxed.
Right. Okay. So most of our audience who would be considering going into business as an owner-operator are going to end up as an LLC. It would be, my understanding is there are instances, but they'd be rarer, that someone would start as an owner-operator as an incorporated entity. Am I right there?
That's correct. Usually in most situations, trucking companies that are set up as a corporation are trucking companies that intend to grow fairly large. Especially if you're just going to be an owner-operator, you really don't need to be a corporation in most situations. You're just going to want to be an LLC. It's simpler, it's easier to manage. And in the corporation, we'll get into some of the more differences when we get into the tax structure piece, but that's really kind of what it boils down to. If you're going to be if you're not focused on growth, then LLC is probably the way to go. If you want to grow and be big, you may want to consider being a corporation.
Okay, good, because the corporation is more structured, it's got more rules and reporting around it, so it does have some more complexity. The LLC would be, in that case, simpler, right? Easier to run, easier to do your taxes and do all the reporting, right?
Correct.
Okay, all right. So what questions would somebody need to answer before they know for sure which one they're going to choose? With the caveat that this is not personalized advice. If you're listening to this, you should get competent help. This is a guidepost, a starting point to ask the right questions. Don't let this be your end-all, be-all for your personal decision. Okay, all right. So that caveat in there, what do people need to think about?
It's really just growth. If you plan on growing and being a large fleet, you're probably going to want to be a corporation.
Okay.
If you plan on staying in that kind of smallish fleet size, and everybody's situation is a little bit different. Look, Haulin Assets has 10 trucks. We're an LLC, limited liability company. If you want to grow larger than that, you're probably going to want to be a corporation. And we'll talk a little bit about why that is again when we get into the tax piece.
And that, yeah, it kind of gets what I was saying earlier about you're probably not going to have to worry about changing this, but there are instances where that could come into play. So as people are thinking through this and they're getting things set up, walk me through some common mistakes to avoid, pitfalls to avoid.
One of the biggest ones is really mixing your business with your personal stuff. And this becomes really big when you are mixing your funds. Like if you're using the same bank account for personal expenses as you are for your business, huge no-no. That's not showing that separation between your business and yourself. And so you can't do anything that kind of commingles that relationship. You want to show those as two very distinct things. And the biggest mistake that people make is just commingling funds. Again, I'm not a lawyer here. I'm just going based on stories that I've heard in the past. That can actually, if you pierce the corporate veil, as they say, this is a legal phrase, right? If you are mingling your funds and treating the business like it's, your own personal cash machine, then others might be able to as well in a legal standoff. Yeah, they
right?
will certainly try.
Yeah. Okay. So let's see. Other mistakes that people might make, like, choosing the wrong structure to begin with would be one. Any others to be aware of?
It's always a good idea to get legal advice when you're trying to do this, especially if you're going to try to make be a little bit more complicated than in a lot of situations, like if you're trying to grow, especially if you think you're going to grow, you may want to get that legal advice up front, because it's usually easier to set things up the right way to begin with rather than having to change it later on down the road.
Right. Now, this is actually a question I don't know the answer to. Oftentimes I'll ask you a question and I already know. This one I don't. Chris, are there lawyers who are trucking industry specific, like really specialized in this area?
Absolutely.
Okay. So then my next question would be, if I'm setting up a business entity and I know that, to make sure that my finances are looking good, I'm going to go ahead and just find a good tax and accounting CPA to handle my finances going forward. Couldn't I just use my CPA to do this? Do I have to get a lawyer?
A lot of the time CPAs will understand both sides, the legal structure and the tax structure, and a lawyer oftentimes will understand the tax piece enough that they can give you advice on both of them, help you either one. As long as you've got a good advisor that understands both pieces, they can often get you set up the right way.
Okay, cool. Good. Any other parts of this that you want to hit before we move on to our next subject?
I think we need to head into taxes. Super exciting.
If you're not watching on YouTube, you didn't see the gleam that just entered Chris's eye. It's like the best looking girl in the school just said yes to you asking her to prom. You're like, Chris, he's going, there's spreadsheets, there's taxes, there's I can just see you glowing over here.
It's exciting.
All right, so you want to get into taxes. Where do you want to start with that?
So let's talk about the fact that an LLC, that's the legal structure. Now you've got to pick your tax structure. So you can either be taxed as a sole proprietor, which is essentially if you're an LLC and you're the only member of it, you're going to be default taxed as a sole proprietor.
Right.
If you have multiple members in the LLC, your default tax is going to be as a partnership. But oftentimes, one of the other very common ways to be taxed as an LLC is as an S corporation.
Does it matter what the S stands for? It's okay for the answer to be no. As we're trying to give people a lot of details, I can hear somebody saying, "What the heck is S corp?"
I think it's subchapter corporation.
Answer is right. No, it doesn't matter. Okay, good. So, all right, you can choose sole prop. A lot of people choose S corp. All right, sorry, go on.
So you've got all these different methods that you can be taxed as, and how you get taxed changes based on which one of those that you choose.
Okay, all right. So if I choose a sole proprietorship, the taxes are going to be different. And you just hear such horror stories about self-employment taxes. And I assume that would come into play as a sole proprietor. is like, given all these stories that I've heard in the past, is that an automatic no-go? Like, why in the world would anybody choose sole prop if the taxes are so bad, right?
There are still some situations where it's okay to be a sole proprietor, especially that first year or two when you're not really making money. But once you start making money as a business, you end up paying way more in taxes if you're just a sole proprietor.
Because we're running into income tiers, right? As a sole proprietor, it's like, hey, you lost 30 grand last year. Congratulations, you get a little break.
Yeah.
But you made 200 grand last year. You're in a tax bracket that's going to be pretty hefty, right?
So just to simplify that, if you lose 30 grand and you're a sole proprietor or an S corporation, that $30,000 loss is essentially going to flow through onto your personal taxes the same. There's not going to be any difference. If you made $200,000, it's a big difference. What you get taxed as a sole proprietor versus what you're going to get taxed as an S corporation is going to be a vast difference.
Okay. All right. I think I'm getting this, Chris, but again, I'm not sure. So, all right, let's move on, because I've got a question for you about payroll taxes, because now we've got this separation. You've got the LLC, so now you're Chris Vernon and you're Chris Vernon LLC. You've talked in the past about when you form your trucking company, you need to hire yourself as an employee. That's part of the deal. Yes, you do have to have an employment application on file and all these things. So then does Chris Vernon LLC pay payroll taxes to employ Chris Vernon, the individual?
Yes, and that's really where this difference in S corporation comes into, one of the biggest differences with it. And let's kind of break this down a little bit. So whenever you are an employee of a company, you get paid a W-2 wage, right?
Right.
And that in that W-2 wage, your employer takes out taxes. They're going to take out some income tax based on the W-4 that you file. And they're also going to take out FICA taxes. You remember what FICA stands for?
Oh, federal income. Well, no, I don't.
Federal Insurance Contributions Act.
There it is.
And so it's basically the money that funds Social Security. So Medicare, Medicaid, one of those two.
Yeah.
Social Security, all that kind of stuff. When you pay it as a W-2 employee, the company that you work for pays half of it, and you personally pay half of it. But when you're self-employed, guess what?
You get to pay the whole dang thing.
All of it. Yeah. So it boils down to 15.3%, and when you're self-employed, it's called the just self-employment tax.
Right. And this is where, the horror stories. People weren't prepared. You go from being an employee and you're getting the tax withholdings, and then you do your taxes in March or April every year.
And you think you've done well because you've pulled out all your income
Yep.
tax. You think you've covered that and you're good to go. Well, guess what? There's
Right.
another 15% you get to pay.
So getting into some of the details, what we're talking about here, you said, is not about the legal entity, it's about the tax entity. So what's the difference then, moving from that sole proprietorship to being taxed as an S corp? That's a phrase you'll hear all the time.
So it's kind of crazy, because with an LLC, you've created that legal separation for a legal purpose, but you haven't done that yet for a tax purpose. If you're a sole proprietor, if you're the only member of that LLC and you're taxed as a sole proprietor, the IRS is still treating you as one entity. But when you file for S corp status, it kind of creates that separation again for tax purposes. So now you're separated legally as two entities, and you're separated on a tax basis as two entities. So then at that point, Chris Vernon LLC can hire Chris Vernon as an employee and pay a W-2 wage to Chris Vernon. You take out that FICA tax, and Chris Vernon LLC pays half of it, and Chris Vernon personally pays half of it on the wage that I earn as an employee of the company. But then any profit you make above and beyond that goes essentially kind of to the S corporation, and it filters back to Chris Vernon as business profits which then do not have to pay either FICA taxes or self-employment tax on that extra profit above and beyond.
Okay. What? No, I think I'm getting it. But as a lot of people might have expected of myself and themselves at the beginning of the episode, it is so easy for eyes to glaze over. But this is important stuff. So yeah, go ahead, rewind 3 minutes and listen to that again. Make sure that you're getting some of these concepts. But yeah, there's so many nuances here, Chris. So then, why is it that specifically trucking companies will often choose that S Corp status? What's the difference for this industry in particular?
I think the best way to kind of explain this is to let's walk through kind of an example of how that would work. So if you're an LLC and you're taxed as a sole proprietor, and let's say that LLC essentially made $100,000 in the year. If you're a sole proprietor, 15.3% of that is going to go to self-employment tax. So $15,300 is going straight to the government, self-employment tax. Now let's say you decided to elect S Corp status. You still made that same $100,000, but you're going to pay yourself as an employee of the S Corporation a reasonable wage. And that reasonable wage, that's where you really kind of need to talk to a tax professional to figure out what that is. But just to kind of keep things simple and keep numbers simple, let's say that reasonable wage is $50,000.
Okay.
So that means you're going to pay FICA taxes on that, $50,000. You personally, Chris Vernon, as the employee of Chris Vernon LLC Trucking, is going to pay half of it. So, that's going to be half of that 15,000.
Oh,
so
I'm just waiting for you to do fast math, man. That's
$17,625.
50.
One of the two.
Yeah.
We're close enough.
Something like that.
Little over $7,000, or a little over $7,500. And of that $7,500. Chris Vernon personally is going to pay for it. Chris Vernon LLC is going to pay for half of it.
Okay.
But then the other $50,000 that's left over, that is going to go as profit to the company, come back to Chris Vernon as profit. You're going to pay income tax on it. And you're also paying income tax also on that first $50,000. But you're not going to pay FICA tax or self-employment tax on that other $15,000 or other $50,000, which is essentially going to save you that $7,500 and change. So you've cut that tax bill in half just by selecting S Corp status.
So this is another way of putting it is if you cast your mind back to the legal part of what we were talking about, the veil of separation, right? This is you're separating you as an entity from your business as an entity. We're doing the same thing for tax purposes so that you as an individual don't have to pay the same level of tax on the business operations, right? We're talking about fuel, we're talking about insurance and repairs and all the things that the business has to pay for. That's not money that you're paying to live. It's money that the business is paying to operate. So now we're separating all these things both legally and tax-wise.
There you go.
Okay. All right. Whew, look at me go, Chris. Hey,
Yeah.
I'm getting there. All right. So good. You want to structure this correctly. Make sure that everything is to your advantage. And again, I'll say it. This is not personalized advice. Make sure you get good, competent help from somebody who knows both sides of this question, right? And if it takes two people, it takes two people. But get competent help on both sides of it. All right, Chris, let's start the process of wrapping this up. What are the key takeaways, the things you really want people to remember here?
So how you structure your business is ultimately going to impact the amount of money that you bring home and you put in your pocket. And an LLC, setting up that is a good start, but it's probably not the end game. At some point, and depending on how quickly you think you're going to be profitable, you're going to want to probably convert to an S Corp if you are an LLC. If you're a corporation, if that's what you're electing, there's some other options there. We're not even going to get into that. That's way complicated. That definitely you're going to want to talk to somebody or multiple somebodies that can steer you in the right direction with that.
Okay, and then lastly, to go back to the beginning of our conversation, all of this, kind of like you were just saying with corporations versus LLCs, as soon as you introduce partnerships into the mix, it's not double the complexity. We're exponentially more complex once we get into partnerships and that sort of thing. So again, competent help, et cetera, et cetera. Am I right there?
Absolutely. Partnerships can be a really good thing, but you want to go into a partnership with your eyes wide open, and you want to cement that operating agreement before you even start conducting business.
Okay, perfect. Whew, Chris, we made it. So I'll say it again, maybe one more time before the end of the episode. Listen to it again. If your eyes started to glaze over, I get it. Okay, this is not the most exciting topic in the world, but think of it like a building. We call this a foundational topic for a reason. Foundations are not exciting. You only think about the house that's built on top of it. Well, without a strong foundation, the house is going to crumble. Make sure you understand this stuff, even if it's not the sexiest topic that we've ever covered, right?
Great way to put it.
All right, Chris, now you told me that there's a giveaway, something we're going to be doing a giveaway. Before you tell me about that, I'll just remind everybody to go to HaulinAssetsLLC.com for full show notes on every episode, including all of the financials that we talk about at least every other week. So you can see Haulin Assets financials going back to 2018, 17? When did we start this thing, Chris?
2019.
2019. Okay, so going back several years, you can see all the financials. You can follow along with Haulin Assets' journey at HaulinAssetsLLC.com. Also, go to MotorCarrierHQ.com for all the tools, tips, and people you need to make that leap to owner-operator and beyond. That was my sales voice, by the way. And then lastly, HaulinAssetsAcademy.com for the self-directed learning. I mentioned this last time, but the prices came down. I was kind of shocked at the prices you guys are letting these things go for, because they're incredibly valuable. I would highly encourage people to go check them out, get the combo packages that bring those prices down even more. It's super, super valuable stuff. So HaulinAssetsAcademy.com. Now, Chris, what the heck is going on here?
Well, first and foremost, share us with your friends. We're coming up on a pretty big milestone here for the podcast. Almost, getting close to the episode 200. And all I'm going to say at this point, you kind of give a little bit of a teaser, but I'm just going to say stay tuned. We've got something really big and something really exciting for you to come with that 200th episode.
Okay, so we're not even going to tell them yet.
Nope.
No, stay tuned.
Stay
what
tuned.
A professional tease you are. I'm going to give you a silver pole here pretty soon. You're such a tease. All right, and then Chris, this isn't the only time we've talked about this. There is another episode that people can go listen to. It's episode 2, is that right?
I think it was episode 2, yeah. Again, a little bit more in depth than what this one was. Very similar topic, so feel free to go back and listen to that one too.
We took our own advice and invited actual experts to talk to us about it. So, all right, excellent. Chris, thanks so much for coming in, and thank you everybody else for listening. We will see you all next time.
See you then.